Rita Crundwell stole $53.7 million from a town of fewer than 16,000 people. The money built a nationally known quarter-horse empire, hundreds of horses, show victories, property, trucks, trailers, jewelry, and a luxury motorhome. On the other side of her private ledger, Dixon cut, borrowed, and postponed work it could not seem to afford. For more than 20 years, the city's trusted comptroller moved public money through an account almost nobody else knew existed. Then, in October of 2011, Rita left town. Her deputy, Kathe Swanson, contacted the bank with a simple request. "I want all of the bank statements." Among the familiar city accounts was one Kathe had never seen before. Its initials were RSCDA. It appeared to belong to Dixon. The statement was addressed to City Hall, care of Rita Crundwell, and it showed hundreds of thousands of dollars moving through an account that did not exist in the city's books. Kathe did not confront Rita. She hid the statement in her car and took it to Mayor Jim Burke. The mayor went to the FBI. For roughly 6 months, Kathe continued working beside the woman she now suspected, quietly helping federal agents follow the money. That single statement would expose what prosecutors described as the largest theft of public funds in Illinois history. But the mystery is larger than one hidden account. Rita's wealth was visible. The city's shortages were visible. Outside professionals reviewed the city's finances. The bank processed the secret accounts transfers. Yet the scheme survived from 1990 until 2012. How could one employee take nearly $54 million from a town this small and make the money disappear in plain sight? To understand why one bank statement mattered so much, you first have to understand why Rita Crundwell was trusted with Dixon's money. Dixon sits along the Rock River in northern Illinois, about 100 miles west of Chicago. It is the kind of place where public office is personal. City employees know the residents who call. Elected officials know the people presenting the budget. Reputation is accumulated slowly, through years of being present. Rita Crundwell began accumulating that reputation when she was still in high school. She started working in Dixon's finance department in 1970. By 1983, she had become the city's comptroller and treasurer. Over time, she was not merely someone who processed the numbers. She became the person who understood them, the employee who could explain why an account was low, why a payment was late, and what the city could or could not afford. That history mattered. Long service can look like evidence of loyalty. Fluency can look like proof of honesty. When one person has answered the same financial questions for decades, it becomes easy to stop asking who verifies the answers. Rita's authority was practical, not ceremonial. A small city does not have endless layers of finance staff. The person who knows which payment is coming, which department can wait, and which account contains available cash becomes essential to daily government. Every year, Rita remained in that position, added another year of institutional memory that belonged largely to her. Replacing her, questioning her, or checking behind her could feel less like routine control and more like doubting the colleague who had kept the system running. Outside City Hall, Rita built a second identity. She raised American quarter horses under the name RC Quarter Horses. The operation became famous in its world. Her horses won major competitions and produced champions. At shows, the Dixon City employee was not simply another owner. She was a successful breeder whose name appeared beside valuable animals and prestigious awards. There was no need to hide that success. In fact, public success helped explain itself. A winning horse business can appear to generate the wealth required to buy better horses. Better horses can produce more wins. More wins can make the next expensive purchase feel plausible. The operation's apparent prosperity became evidence for the prosperity. But the economics moved in the opposite direction. Rita's city salary was approximately $80,000. A large breeding and show operation consumes money. Feed, veterinary care, training, transportation, employees, property, equipment, entry fees, and the purchase of new animals. The more successful the empire appeared, the more cash it required. For years, people in Dixon knew that Rita loved horses. They saw the operation grow. They saw the awards, the travel, and the lifestyle around it. What they did not see was the link between that growth and the municipal accounts she controlled. That link began on December 18, 1990. On that day, Rita opened a bank account in the name of the city of Dixon. The initials were ordinary enough to pass at a glance. RSCDA. They stood for Reserve Sewer Capital Development Account. It sounded exactly like the sort of fund a city might maintain. But Dixon had never created it. It was not in the city's books. And Rita Crundwell was the only person who controlled it. Trust had just become infrastructure. The RSCDA account was secret, but it did not operate outside the banking system. It used normal checks, normal deposits, and an official-sounding municipal name. That was its strength. Dixon received revenues into legitimate city accounts. Rita could move money from those accounts into a real capital development fund. She then wrote checks from that fund, payable to treasurer, and deposited them into RSCDA. On paper, the transactions looked like city business moving between city accounts. Once the money entered RSCDA, Rita could write checks for her own benefit. To create a reason for the transfers, prosecutors said she produced 159 fictitious invoices that appeared to come from the state of Illinois. The invoices suggested the city owed money for legitimate public projects. They provided paperwork for payments that had no legitimate purpose. Rita also controlled the flow of information surrounding the account. Statements came to City Hall in her care. The employee who moved the money could collect the mail, maintain the records, and explain the balances. The false account did not need to fool everyone independently. It needed to remain inside a chain, controlled by one trusted person. The name did much of the camouflage. Reserve Sewer Capital Development Account combined the language of savings, infrastructure, and municipal planning. A check payable to treasurer did not announce that money was leaving the government. It appeared to stay inside it. And because RSCDA was missing from Dixon's official ledger, an official reading only that ledger would not see an unusual balance to investigate. The bank had the account. The city had the books. Rita stood between them. This can sound abstract. Funds, invoices, transfers, accounts. So follow one day. On September 8, 2009, Rita caused $350,000 in city money to be deposited into the RSCDA account. That same day, she transferred $225,000 from RSCDA into an account belonging to RC Quarter Horses. The purpose of the transfer was not hidden in a maze of international companies. It was to make sure a check would clear for the purchase of a horse named Pizzazzy Lady. That payment is the scheme in miniature. Money that began inside Dixon's government moved through an invented municipal account and emerged inside Rita's horse business. The document trail looked bureaucratic. The destination was intensely personal. The mechanism was repetitive, not magical. Move legitimate city revenue into a fund under Rita's control. Support the movement with false paperwork. Deposit it into the secret account. Spend it on the horse operation and personal lifestyle. When city officials asked why Dixon was short of cash, provide an explanation that fit the moment. And the amounts grew. In 1991, the first full year of the scheme, more than $181,000 was diverted. By 2008, the annual theft reached $5.8 million. Across the charged period, it averaged more than $2.5 million a year. Those numbers reveal something important about long frauds. They do not necessarily begin at their final scale. A small, successful theft becomes proof that the control system will tolerate another. Repetition builds confidence. The false account becomes part of the perpetrator's routine, even though it never becomes part of the city's books. Each year, Rita learned the same lesson. The transfer worked, the explanation worked, and no one outside her chain was assembling the whole picture. Once the machine proved reliable, it could finance an empire. RC quarter horses became one of the most visible operations in its sport. Rita bought expensive horses. She maintained farms and equipment. The government would later identify residences and property in Illinois and Florida, trucks, trailers, a luxury motorhome, jewelry, trophies, and enough tack and personal property to fill an auction inventory. Then there were the horses themselves. In May 2012, the government's civil forfeiture filing identified 311 registered quarter horses. As the liquidation continued, the U.S. Marshals Service eventually reported selling approximately 400 horses. Those figures come from different stages of the seizure and sale, but both describe the same extraordinary fact. A municipal employee had assembled an animal operation on a scale large enough to become a major federal logistics project. This was not a collection of inexpensive pasture animals. The operation was built around registered horses, professional competition, breeding value, and the machinery required to move animals between farms and shows. Trucks and trailers were not accessories to the business, they were part of the business. So were the farms, tack, staff, training, and constant care. A single high-value purchase might be remembered as a prize. The real cost was keeping the entire system operating every day. The horses won. That made the contradiction harder to see. In many fraud stories, suspicious wealth arrives without an explanation. Rita's wealth arrived with one. She was known as a champion breeder. A valuable horse might appear to have been produced by the business. A sale might appear to fund the next purchase. Awards created prestige, and prestige made the operation look commercially powerful. The horse empire acted like a self-confirming story. Its success explained the money. The money purchased more success, but the cash underneath that cycle did not begin at the ranch. It began with Dixon's taxpayers and the public accounts entrusted to Rita. Rita did not spend 22 years pretending to be poor. She traveled, competed, and accumulated high-value animals and property. None of that alone proved a crime. A public employee can have a successful business. Instead, the public and private stories reinforced each other. Rita looked competent at City Hall because she could explain the shortages, and successful at horse shows because she could fund the operation. Her authority in one world protected the money feeding the other. At sentencing, the judge said Rita had shown greater passion for the welfare of her horses than the people of Dixon who she represented. That comparison was not rhetorical. Every dollar entering the private empire was a dollar that could not remain in the city. The horses were only the visible side of the transfer. The other side was Dixon's missing cash. Municipal theft does not arrive as an item labeled fraud in the public budget. It arrives as scarcity. There is less money than expected. A department is told to wait. A road project is deferred. A budget is reduced. The city borrows to cover needs that should have been funded. Residents see the result, but not the transfer that produced it. During Rita's scheme, Dixon faced repeated cash shortages. According to federal prosecutors, she told city council members and department heads that the city's financial problems came from the struggling economy and from the state of Illinois being late with payments. Both explanations were plausible. Cities do suffer during downturns. State payments can arrive late, and Rita was the official people relied on to interpret the city's finances. The explanation, therefore, came from the same person who had created the shortage. The theft significantly disrupted Dixon's ability to provide services. The city cut operations, felt pressure on staffing and police budgets, borrowed money, and postponed infrastructure work. It would be wrong to attribute every difficult budget choice solely to Rita. Cities face many pressures, but the federal record is clear that removing tens of millions of dollars from Dixon made those pressures far worse. This is where the scale of $53.7 million becomes easier to understand. Spread across Dixon's approximate population at the time, the loss was roughly $3,400 for every resident. That is not how the theft was billed, of course. No family received an invoice from Rita. The cost was distributed through the city, in cash that vanished before it reached a project, in debt taken on to replace missing funds, and in choices made from budgets that were smaller than leaders had been told they should be. The number is not only the cost of horses, vehicles, property, and jewelry. It is also the absence of public choices. Money that should have been available at one moment cannot simply be inserted into the past after it is recovered. A repaired road years later does not erase the years it was delayed. Borrowing repaid after a settlement does not eliminate the interest or the decisions made under false scarcity. Rita controlled not only the checks, but the explanation for why Dixon could not afford what residents could see it needed. Every postponed job made her explanation more important. The first person to do that was not looking for a national scandal. She was covering the office while Rita was away. In 2011, Rita took 4 weeks of paid vacation and 12 weeks of unpaid vacation from the city. That absence created a rare break in the routine. In October, while Rita was out of town, Deputy Treasurer Kathe Swanson needed the city's bank statements. Instead of asking only for the accounts she already knew, Kathe asked the bank for all of them. The response contained an account she had never seen: RSCDA. The statement showed 3 large deposits. It came to City Hall, care of Rita Crundwell. The name sounded municipal, but Kathe knew it was not part of the city's accounting system. Kathe did not need to understand all 22 years in that moment. She needed to recognize a mismatch. If RSCDA was truly a city account, the deputy treasurer should have known it. If it was not a city account, it should not have been receiving city money. Either possibility demanded an explanation from someone other than the person named on the statement. Her reaction mattered. She did not walk into the office waving the paper. She did not call Rita for an explanation. According to Kathe's account, she put the statement in her car and brought it to Mayor Jim Burke. Burke contacted the FBI. From that point, the discovery became an investigation. Federal agents needed records, transaction histories, and time. They also needed Rita to remain unaware that the account had been found. For roughly 6 months, Kathe kept going to work. She sat near Rita. She behaved normally. She helped investigators obtain the material they needed, while the person suspected of stealing from the city continued to control its finances. Ordinary office behavior became part of the operation. Kathe could not reveal that the mayor knew that federal agents were tracing the account, or that records leaving the office might be evidence. Every routine exchange carried a second meaning. The investigation depended on Rita believing that the system around her was still the same system she had controlled for years. The emotional pressure is difficult to overstate. A fraud that looks obvious in retrospect did not arrive with a label confirming what Kathe had found. Rita had been part of Dixon's government for more than 40 years. She was a colleague with immense local authority. If the suspicion were wrong, the accusation could destroy reputations. If it were right, millions more could be at risk. The FBI followed the account while the routine continued. On April 17, 2012, Rita came to Dixon City Hall. Agents were waiting in the mayor's office. She was arrested there. The news detonated across a small city. Investigators had to reconstruct years of transactions, false invoices, account movements and purchases. The horse empire was seized. Properties, vehicles, equipment, jewelry, and personal possessions became evidence and assets to be sold. The method of discovery carries the central lesson of the case. The decisive control was not a more sophisticated audit formula. It was a second employee receiving the complete bank statement set. Kathe saw one account that did not belong because, for that moment, she could compare the bank's entire list with the city's actual books. The scheme had survived while information was divided. It began to collapse when one person saw the whole. Kathe would later say, "My only regret is that I didn't find out sooner." Only after the arrest could Dixon learn how much sooner would have meant. Rita Crundwell pleaded guilty to wire fraud on November 14, 2012. The final adjudicated loss was $53,740,394. That number represented more than 2 decades of diverted city funds. It was not a guess based on the apparent value of her lifestyle. It came from reconstructing the transactions that moved through the secret account. On February 14, 2013, a federal judge sentenced Rita to 235 months in prison, 19 years and 7 months, and ordered restitution and forfeiture equal to the loss. A prison term could not put the money back into Dixon's accounts. For that, the government began dismantling the physical empire the theft had built. The U.S. Marshals Service sold horses in large auctions. It sold trailers, vehicles, tack, jewelry, and other personal property. The luxury motorhome, houses, and land were part of the recovery effort. Buyers encountered the strange afterlife of the fraud. Championship animals and expensive equipment converted back into cash for the town that had unknowingly paid for them. Until each animal was sold, the government had inherited the responsibilities of an enormous horse business. The horses still needed food, shelter, veterinary attention, handlers, records, and safe transport. Waiting for an ideal price could increase the cost of preserving the asset. Selling quickly could reduce the return. The same living inventory that had made Rita's empire so impressive made liquidation unusually complicated. The sales were dramatic, but the arithmetic was sobering. By the time of sentencing, the government reported more than $12.38 million in gross proceeds from asset sales. After expenses and claims, approximately $9.5 million in net proceeds was being held for restitution. That is a significant recovery. It is also less than 1/5 of $53.7 million. Forced sales do not guarantee the original purchase price, and caring for hundreds of horses while transporting and auctioning them costs money. Much of the stolen cash had already become feed, travel, labor, depreciation, and consumption. The empire looked like the money. It was not the money. A court could declare the full amount owed, but it could not recreate cash that had already been spent. The spectacular horse auctions recovered only part of Dixon's loss. The larger financial recovery would come through civil litigation involving the institutions that had handled or reviewed the city's money. And that raised the question the criminal case alone could not answer. Who else was supposed to see RSCDA before Kathe Swanson did? After Rita's conviction, Dixon pursued claims involving its outside auditors and the bank that held the RSCDA account. The civil cases did not turn those institutions into co-conspirators, and a settlement is not a criminal conviction. But the litigation forced a wider question. How could an account in the city's name remain outside the city's books for so long? Dixon eventually recovered approximately $40 million through a combination of Crundwell's assets and civil settlements. That was far more than the net proceeds from horse and property sales alone. It allowed the city to repay debt and begin funding work that had been delayed. Each participant possessed information. Rita possessed the connections. She could create the account, move the cash, receive the statements, create supporting invoices, maintain the records, and explain why money was missing. When too many stages of a financial process belong to one person, every later review risks beginning with that person's version of reality. A bank can process a transfer without knowing the city's internal books. An auditor can test selected records without seeing an account withheld from those records. An elected official can question a shortage and receive a plausible explanation. None of those facts means the information was unavailable. It means the information was separated across institutions, and the only person with the complete map was the person committing the fraud. The simplest preventive controls are designed for exactly this reason. The person who authorizes a payment should not be the only person who records it. Bank statements should reach someone independent of the employee making transfers. Every account held in a government's name should be confirmed directly and reconciled to the official ledger. Unexpected wealth should not be treated as proof of wrongdoing, but financial authority should never be exempt from routine verification because a colleague appears trusted. Notice how closely those controls match the discovery. Kathe did not expose RSCDA by predicting Rita's purchases. She received information directly from the bank and compared it with the city's own account list. In one request, custody of the statements and knowledge of the books moved outside Rita's hands. The safeguard that finally worked was the safeguard that had been missing. These are not glamorous ideas. They are intentionally boring. That is why they work. The U.S. Attorney's summary of the case was blunt. Trust, without verification, can lead to betrayal. The criminal sentence appeared to provide a final ending. Then, more than a decade later, the case returned to Dixon one more time. On December 12, 2024, President Joe Biden commuted the remainder of her federal sentence. The distinction matters. A commutation reduces or ends punishment. It is not a pardon, and it does not erase the conviction or declare the person innocent. Rita's wire fraud conviction remained. So did the history of what happened in Dixon. For residents and city officials, the decision reopened a story that had never felt fully closed. By then, Dixon had recovered roughly $40 million. Debt could be repaid. Infrastructure could be repaired. Financial controls could be redesigned. That recovery was substantial enough to change the city's future, but it could not produce a clean ending. Some of the money came from selling Rita's property. Much more came through civil resolution. The sources of recovery were different, yet all of them existed only because the original system had failed. Dixon had to turn a criminal case, hundreds of seized animals, and years of litigation into the capital it should have controlled from the beginning. But recovery has a time dimension. Money returned in 2013 cannot fund a road in 1998. A settlement cannot restore the public employees, projects, and choices constrained by shortages in the years the theft was active. It cannot refund the attention spent investigating, litigating, auctioning, rebuilding records, and explaining to residents how the town's most trusted financial official had taken more than $3,000 for every person who lived there. And it cannot instantly restore trust. Rita Crundwell's fraud is often remembered because of its extremes. Almost $54 million, hundreds of horses, more than 2 decades, one small city. But the mechanism was built from ordinary things. A bank account, a stack of invoices, statements arriving in the mail, checks signed by a trusted employee, explanations accepted because they came from the person who knew the numbers best. The bank saw an account, the city saw reports, auditors saw the records they were given, the horse world saw a successful breeder. Then Kathe Swanson asked for every statement. That request did not create new information. It let someone other than Rita compare the accounts the bank recognized with the accounts the city recognized. One list contained RSCDA, the other did not, and a 22-year fraud began to collapse. The lasting lesson is not that a town should never trust a long-time employee. Public institutions cannot function without human trust. The lesson is that trust and control are different things. Trust is a relationship. Verification is a system. Dixon had the first. For too long, it did not have enough of the second.